Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, May 20th. I meant to start it at 8:15, but I'm about 6 minutes behind schedule. Let me know in the comments or in the chat if you do try to tune in when I schedule the streams. Sorry, I'm usually late for the morning ones, but working late, that ends up happening. But yeah, so let me know if that is an issue. But anyways, wanted to dive into the charts here. Going to go over the usual tickers, but then I have some on the list that I either have traded and just have been looking at pretty closely. I'm really excited about those. And then I'm also excited to include also Hycroft Mining and then Moderna, ticker symbol mRNA. So I'll get to those, where they fit into the list. And but I'm going to begin with the UVIX here, which is the 2x long VIX futures ETF, which closed yesterday at a price of $28.41, being up about 2.79% on the day and continuing up a little bit, about 0.4%. In the pre-market, it was up a little bit more overnight, so curious to look at that. But yeah, I'm wondering if markets are going to be going higher. It seems like that might be the case, which means that the UVIX may not actually be rallying up to, around $36 or so, or maybe to fill this gap here at 38.12. So it'll be very interesting to watch that. And one thing that I've been doing lately, I've actually started reading this book on Wyckoff analysis. And so I'm going to try to dive into, interpret more the volume behind the candles that we're seeing. And, so what does look good to me about this, following this gap down, big candle here, larger volume candle here. And I should note, I am just learning this stuff, so brace with me. But what we can see following that is volume did diminish the past few days as it held down here, so that is a good look, but then it has been increasing over here while not going up too much, so that actually doesn't look as good. This looks like, hey, maybe we're going to start to see this move higher like I have doodled, but the past few trading days, it's actually not really looked that great with volume increasing. So, I am bracing for this to potentially come down to 25. I do have a limit buy order at 27, but I don't know. I might want to adjust that just because I think that this looks a little bit weaker, and maybe 25 is a good level to add at. I was hoping to, get a swing out of this yesterday or maybe today, but I don't think that's going to be happening, but maybe I'll be surprised. This has always been a nice one to just stack for, the possibility of a move like this. And actually the entire time that I've been kind of tracking the UVIX accumulating in this range, which, is another aspect of, Wyckoff, that this is, a downtrending trend where there's demand down here, supply up here, and then a break. So, this actually would have made me think that this was getting rejected here, but this is also an ETF that tracks the VIX, so the volatility index. So maybe it's not the best one to do that kind of analysis on. But anyways, let's flip over to the 10-minute time frame just to look at, what was happening yesterday. And so over the weekend, the overnight into Monday, then the pre-market, we did see it going up as high as, let's see, about 31.08, but early in the after hours on Friday, 31.86. But then pulling back yesterday during market hours, hitting a low of 27.94, bouncing a little bit, holding that level into after hours, going up into the overnight, but pulling back some. And now it looks like, we're back at where we effectively closed at yesterday. So, not really up too much, nothing notable in the after hours or, non-market hours trading. So it'll be very interesting to see where this opens up. Currently, I'm thinking that this is looking like it's probably going to dip down, like I said, potentially to 25. Unfortunate. It would be nice for it to swing up, move up to here, but it is the reality that this is starting to look a little bit weaker, which is going to be good for the market. So I think that's not a bad thing. Then if we look over at the VIX, which is the market volatility index, did close yesterday at 1814, up 5.22% on the day. And this, it looked like, hey, maybe we could be setting ourselves up for a bounce, a reversal, this to potentially go up to fill this gap here at 2190. But this candle, we sold off all throughout the day yesterday. So we opened at 1984, then closed at 1814. But that was up relative to the close on Friday, which was at 1724. So pretty interesting there. Don't have volume on this chart. I'm not really sure why. I could probably pull it up in TradingView and have some volume on it, but I don't here. But yeah, I think that this looks like it's probably going to be rolling over and maybe coming down to, let's see, 1485 or right around 15, and that would approximately be corresponding with 25 or so that I have drawn over here on the UVIX. So yeah, we'll have to see what happens with that. And on the note of the volatilities potentially fading, breaking down, coming lower, that means that stocks like, or ETFs like the SPY, which is the S&P 500 tracking ETF, this could be going higher. And so this did close. The SPY closed yesterday at a price of $594.85, up 0.11% on the day, but pulling back a little bit in the pre-market trading. What we can see is that I do have this uptrending, kind of consolidating levels that we see here, looking like a rising wedge, which those do tend to break to the downside. So this could potentially be coming down to, let's see, around 570, but this could also be continuing to go higher. One thing that I think is really interesting when stocks, ETFs, whatever, are trading above or below levels that have a trend to them, just because this looks like it's a rising wedge that is more than likely to break to the downside, it's rising. So while it's still trading in here, it could be going higher. Like just over here where this yellow line is, 568 being kind of like a double top. Hey, it's a rising wedge. It's probably going to break down, but then it goes higher. And then, sitting on the sidelines, you'd be missing out on a nearly 5% move to the upside. So, I think it's good to keep that in mind, and that this could be going up to 600. This could even, still within this rising wedge, be going back up to all-time highs, which would be getting up to above 611.39, so maybe getting to 612. But maybe we start to see some bearish divergence or something there, which we're actually seeing hidden bearish divergence currently, where we do have a lower high being formed in the ETF price, whereas with the RSI, we have a higher high being formed. So that's hidden bearish divergence. But if we do look back in time, we can see that over here, we have a lower high in the past, and so now a higher high. And with that, we are still putting in a lower high here with that RSI. So maybe it's actually not so significant, but that is also kind of neglecting the tops here. So yeah, kind of tough to say. But if the UVIX look like they're getting kind of weak, that does make me think that the SPY could be testing 600 very soon. And it did hit a high yesterday on the 19th of 595.54, so getting pretty close there. But yeah, seeing a pullback to like 570, we'll see. That might be happening over the course of the next week. And something very interesting with this that does not show up on the SPX is if I do pull up the 10-minute candles, you might have seen this on X or other people talking about this, but these really odd 5 wicks to the downside. I believe I've seen people talk about this on the 5-minute time frame. And so let's see, this is just a big candle going down there to 588. But yeah, so on the 10-minute time frame, it looks like those are just some wicks over here, if I do zoom in to the correct levels. And so I've heard I believe from Gareth Soloway's channel, so the Verified Investing YouTube channel, that these kind of wicks to the downside like this do suggest where price could be going. This is like foreshadowing for the future. So that would be suggesting price could be coming down. Let's see just that, kind of like confluence level where all of those wicks come down to, so I want to get the most number of touch points. So the lowest wick came down to 589.32. So if I do draw a line going across there, let's just say 590. Well, actually, no, I could do this precisely to that level, because why not? And maybe I should make that colored yellow because it's kind of, caution, but maybe it's a dip buying opportunity if we do pull back to it. So yeah, very interesting there. And I might just, I'm going to do it just because I want to get the overlap of all those candles, but then I'm probably going to have to adjust that level over there, lock that into place. So yeah, we can see that overlap. Very interesting, and that would be suggesting from current price a drop down of about 0.74%. So nothing too crazy, but that is something to be considering. And then also considering the volume, as we do have this upside move, this gap up here, which let's see, maybe I do I'll also compare this with the SPX now, which is the S&P 500 index. So I do have this gap noted here. There's also this other gap here, so I probably should have that highlighted as well. And the closing price on the 6th for the SPX was $5,659.91. So I do have that marked correctly there. Just going to make that a dashed blue line so we know there's a gap. That does correspond nicely with this bounce here. Maybe I actually deleted that level yesterday. I'm not really sure. But yeah, the SPX did close at $5,963.60. Getting very close to $6,000, and then getting back to those prior all-time highs would be $6,147.43, but not there yet. And we do see lower highs in the index's price, but we actually see higher highs in the RSI. So that is just like the SPY, hidden bearish divergence. But what I wanted to do when switching over to the SPX was confirm that this gap was here because I wanted to draw it on the SPY. And so that closing price on the 9th was at $564.34. So locking that in place as a blue dashed line there. So we can see that potentially being a dip level for the SPY at 564.34. But those wick levels that I drew, we did have some overlap with the trading from yesterday. Looking over at the hourly time frame, we see some wicks there, but then on that 10-minute time frame, we do see those wicks, and we did open below there. So it's really not too surprising. And I wonder also too, foreshadowing for where the price could be coming down to. But I also wonder if this was maybe some like nefarious plays that orders were not filled at the lows here, and this is going to get pushed higher, and so maybe some players that wanted to get in, or maybe these were done, whether it's dark pools or in after hours or something, but they had to show up, and so they showed up like this. I'm not really sure. I wouldn't be too worried about that, but 590, 589 pullback level for the SPY. And we can also see that looking at the SPX, we did not have those. So this was the open from yesterday, I believe. Yep. And so we just saw, a bounce from the low yesterday of $5,895.69, upside move, consolidation here looking like a bull flag, and then a move to the upside. And just, for fun, we can do a little Fibonacci extension here to the upside here, and then that pullback. And we did not get to the 100% move, which would be around $5,980. So maybe we do test it up there. But yeah, I mean, looking at this 10-minute time frame, do we have bearish divergence? Again, we do have a lower high here. We also have a lower high in the RSI. So on that shorter time frame, this just looks like, more continued bullish consolidation. So, like I have, this drawn here, just going to draw it again real quick. We do have it again from here up to the lows here. Where would that be suggesting price could be going? Let's just see. I'm going to delete this other one so we're not getting confused. But that one that I just drew would be suggesting price could be getting to around $5,984, being that 100% move. So basically just the measurement from here to there, taken from here up to there. But yeah, we'll see. I do think that with the UVIX, the VIX looking kind of weak, that the SPY and the SPX could be going higher. And then now let's switch over real quick to crypto. Just going to be talking about Bitcoin, Ethereum, and then also Marathon Digital. Pretty excited about those. And let's see. Hopefully this is streaming correctly, and I might just check to make sure that it is. I don't have my little studio control panel popped up, so just want to make sure this is live here. And so yeah, this has been okay. So that is live. Good. Just wanted to make sure. But yeah, going over Bitcoin, currently trading just below $105,000. Still trading within this yellow box that I drew a while ago, suggesting that we'd be kind of consolidating here for about 2 weeks, just a couple days away from that 2-week time frame ending. And so is this going to be breaking to the upside or the downside? I'm expecting it to be going up to the, let's say, $110,000 to $120,000 range, putting in new all-time highs, but maybe we start to see something like we saw over here with it getting rejected before a pullback, and then maybe we get another test, but perhaps going to a higher high, maybe at 120 to 140. That's where Crypto Rover has been talking about Bitcoin actually topping out at for the cycle. So I might be taking some risk off the table if we do get up to those levels, maybe really beginning that around 115. Because that does correspond with the trend line that's historical, and I think we could be met with some resistance there, whether long-term or short-term. But yeah, I mean, I think that we just got a couple more days before we get an upside move. But then thinking about the consolidation over here, this was a little bit uptrending, and maybe I want to draw some trend lines on this so we can see that there was, yeah, I mean, some uptrending support there, and maybe I actually don't want to get this too cluttered. But yeah, uptrending support. So it did kind of break down a little bit, fake out before the upside move, but it wasn't really that notable relative to the lows in the past here. And same with over here, a wick down before, going higher. And so, yeah, I mean, I feel like we could be seeing, a retest of like 103, this green line here. So that might be a really nice opportunity before the next leg up. But it does look like on the 19th, we did hit a low of like 102, 104, somewhere around there, $102,104. And so maybe that was, the last test here before that move higher. So, yeah, and I might actually adjust this to only include that 382 so we don't get too cluttered. And if we do break below that, if we do break below 102, then I could add that next level. But yeah, I mean, I think that dips from 103 down to 102 seem like they'd be nice dip buying opportunities. But we could also be coming down to around 101, maybe even getting into the 5 digits. Is that quintuple digits? Is that, yeah, that's more than quadruple. Yeah, so quintuple digits, not triple digits. So yeah, good to keep an eye on that. But I do think that we could be seeing the next move higher very soon. Oh, but I should also note, looking at this on the very short term, we do have higher highs being put in over here, lower highs. That is bearish divergence. So maybe we start to see a breakdown, maybe come down to 101. That would be a really nice opportunity. But then flipping over to the next one on the list, which is of course going to be Ethereum, currently trading below $2,500, but still in this kind of 2-week consolidation range that I have marked here, with the low of that box being around 2,400, the high being around 2,700. We have gotten some dips below 2,400, but maybe those orders would not have been filled if there were, dip buys placed at 2,360 or, corresponding with that 382 marked in yellow there. So yeah, dips to around 24, about $85 lower than current price. I think that those are nice opportunities. But we can also look at the past. How did Ethereum trade in these consolidation ranges before going higher? There was a wick lower, but not really lower than the lows that we saw over here. So I don't think it's a good idea to get greedy thinking that this could go back to these lows that we hit on the 18th and the 19th, which were both, sub 24, not getting to 23. And so, yeah, 24 seems like a dip buying level to me. But then now, after going over those cryptos, let's look at Marathon Digital, so ticker symbol MARA. I'm going to put this on the daily time frame because, I did go over this in the past. And I just kind of wanted to bring this to your attention again. It does look like we do have this inverse head and shoulders pattern. It is, this line is not drawn perfect for that inverse head and shoulders. And the reason for that is because it's a historical trend line. So, it's kind of like giving more credence to this inverse head and shoulders. Even though it's not perfect, there's just more historical significance. So it's just like layering up or having some confluence in levels in theses that this is an inverse head and shoulders pattern with prior support that we have broken below, but we have been consolidating above, forming this bull flag. And so just like what I was talking about before with, I don't know if it was Bitcoin, I forget, sorry. But, we have a move up here, pullback, and that will be suggesting a move up to around $18 or just shy of it. But we could also, adjust this to be over here to look at that as like a bull flag, and that kind of projected that we could be going up to around $15, $16, which we did hit a high on the 12th of 1669. But really, I guess I've kind of demonstrated here that those levels, that 100% level, is not necessarily perfect when looking at this type of consolidation. But since we do have, in my view, a very clear move to the upside, bullish consolidation, and let's actually think about the volume behind that, because over here we didn't have too much volume as price is going up. Volume is going up, so that is good because you want to see volume supporting those moves. However, what does show some divergence is that we have, kind of a wider spread candle here, lower volume. So there's kind of some divergence there. Then we do see a more volume behind a doji, so a very small spread in the trading for that day based on open and close. So there's divergence there. You would want to see the spread of that candle corresponding with the volume being traded below it. So that was kind of odd. But then we see this gap up, larger volume, larger spread in the candle relative to the previous date. So that's looking good. And then again, we see a wide spread candle going green with a lot of volume behind it. So all of this, while there was some divergence in there, this does seem to be supportive of that move. And then following that move, we did go higher, but then pull back with corresponding lower volume, decreasing volume over the course of 4 trading days. And then following the pullback to that uptrend that I have marked there in yellow, we did see an increase in volume followed by a wider spread candle. So that does look good. That does make me think that this is bullish consolidation. Then we put in a bullish engulfing candle relative to Friday's open and close. And so that is looking good there. But we actually saw lower volume. So there is a divergence there. So maybe it's good to be cautious about that. And so I was thinking, that I would not add to my call or not place a buy order, but considering that there's a little bit of divergence there with lower volume, maybe we could be seeing another dip, maybe down to the lows that we saw here on the 15th, around, let's see, the lows 15.25. So yeah, maybe we could be going back there, and that could present, a nice dip buying opportunity potentially before this does take off. And where might this be taking off to? We do see Fibonacci extension here, so let's just do that. That could be suggesting a price move to around 1931, or maybe getting up to this red uptrend, which would be around $20. So I feel like Marathon Digital here has a lot of potential upside. And just to show you where these lines originate from, so I think that they're pretty cool. We do have the two pivot points going back here to the lows from, it looks like, December 28th of 2022, and then also the pivot low over here from October 6th. And so I'm actually just going to pull that up to make sure those levels are to the penny. So 311, you can see there, 311, and this is 716. So I'm just going to zoom in over here. We can see 716 there. So that is how we get that yellow trend line, which has been historical support. And then to get that red trend line, we do see it over here. So I'm just going to keep that 716 in mind. The other touch point, though, being the low from August 5th of last year. And so let's just look at those. 716, and that low was, let's see, over here, 1366. I'm going to lock that in place just to make sure that low was 1366. We did get a little bit of a fake out break below that level over here, but otherwise did hold it as support before moving up. Tested it again before fading lower, breaking below that yellow uptrend, which is now, or was previously, acting as resistance, but had acted as historical support. So yeah, I mean, I think that this looks set up just really, really nicely on the daily time frame. But something that's really exciting, somebody else was posting about Mara, but not on the daily time frame. And so that was Mr. Chart Norris, as you might expect. He just said, Mara on the 4-hour time frame, is basically suggesting that there is an inverse head and shoulders pattern. So if we look over at the chart here, so let's just kind of evaluate what he's highlighting. Looking at the 4-hour time frame, we can see, yeah, it's kind of ugly. And, I wonder if this invalidates it, but that is on the overnight trading. So if I do adjust the chart settings to exclude the overnight, we can see what he's talking about. And I think that overnight trading is a little bit, always questionable. It just seems like there's such little volume, always a little bit of kind of nefarious price action, you could think. But yeah, here's that inverse head and shoulders pattern that he's talking about. But I am just going to bring back let's see, overnight trading, just because I have gotten used to looking at that for these videos with the overnight market preps and of course these pre-market preps. And yeah, so that does make me think that this could be going higher. And I did reply to that basically with what I was talking about, the lows from 2022 and 2023, with the target around 20. So I think that the chart is just looking really good. And I want to thank Mr. Chart Norris for showing his analysis here, which really just complements my analysis here, that this is not only a bull flag, but it's a bull flag with a inverse head and shoulders pattern, which in my view would be suggesting an upside move. We just take from the low here to the highs, mark that midpoint, let's see, to the highs. That will be suggesting price could be getting up to around $18. So not as ambitious as my $19 to $20 target, but still, very nice having a bullish pattern within a bullish pattern, following up after a bullish pattern here. Lots of bullish stuff going on with Mara that does make me think that Bitcoin will be going higher, crypto in general going higher, that we are still in the final fourth stage of the bull market. And I think that we will be seeing some new all-time highs, whether that's with Mara or with Bitcoin by the end of this year. So looking forward to that. Very excited. This is just looking really good. So I hope that is helpful for you guys. And let's see. Let's go on to the next one on the list. The next ticker, which is going to be ticker symbol URA. I did skip it because I wanted to go over Mara, since that complements crypto nicely. Uranium energy, we will switch over to another one that complements mining, but thinking about this one, it is still below 28, having hit that high of 28.31, pulling back, but then it looks like it bounced about 0.36% yesterday, closing at 27.81, being up in the pre-market to around 28.10. But yeah, I do think that we could be seeing some rejections here, although, Oklo has just been performing really nicely, and, whether one leads the other, I'm not really sure, but, this could be, continuing higher if stocks like Oklo are continuing to perform well. But if we do think about this regarding volume, we do have, widespread candle here with higher volume than over here. So that does make sense because this spread does look a little bit larger than over here. Then we get kind of a pullback in the volume, not as wide of a spread in the candle over here, but then this is just kind of continuing to be flat. This pullback, wider spread, bearish engulfing candle. Yeah, so I don't know. I mean, this is starting to look a little bit weak, but it's also like the volume's not really diverging too much, and we are really holding these levels. So maybe this heads up to around $30 to fill that gap there at like 30.53, but maybe this does pull back to around 26. So good to have a plan whether this goes up or down. Either way, I just wanted to mention that I do have a lot of levels up here, so I kind of feel like I should clean up the chart a little bit, but I think that there's a lot of them. Maybe I should just make this red. The white kind of blends in with other stuff. This one, this is, what's this level here? What is this? Fibonacci retracement. Yeah, so I mean, that's something that is notable to be paying attention to. What's that low though? I should maybe, don't want to lock it there, but want to adjust this to be over here so I can see where it originates from. So that low, is 1950, and then the high over here, it looks like, is 33.09. So let's just make sure those levels are correct. 33.09, nope. And I'm actually sorry, I need to adjust this to be to that pivot. Oh, no, I had it correct before. The correct day. Yeah, there's just a lot of stuff going on here, as you can see. And so let's see, 33.09, 33.09, and then that low of 1950. So there is that. I'm going to lock that into place. And yeah, I mean, I think that, because we are getting some rejection here, I think that 618 around 28 is an important level to consider. I'm just going to remove this, remove that, which did end up happening. I was very proud of that. And then also, considering this move to the downside, there was a Fibonacci. Yeah, this is a little bit problematic. I don't need to have that there anymore because it's just creating some clutter. But we do have that, which, okay, so this, let's see, what's this one? Yeah, so that's the 100%. So I do think that's an important one to have up there. This one over here, that will be suggesting what might be a resistance. We've already gone past it. But really, yeah, I mean, so we're not cluttering it with Fibonacci extensions and whatnot. The thing that stands out to me is, let's see if I do. Let's see, I'll just do a casual trend line, just going from, over here to like that. That does suggest, consolidation over here, resistance over here. That could be a nice dip buying level. So I'm just going to make that thick. It's kind of casual. red there. Ooh, actually, no, I want to make that green. That could be, or maybe I should make that yellow. Maybe I make it orange. And then, we got the yellow here and then green down there. So just keeping all of those levels on the mind, very important to be doing. Got about 5 minutes, man. I should have started this stream earlier, but there are some other tickers that I wanted to go over that I'm pretty excited about. So the next one is going to be Hycroft Mining. I don't really have too much to say about this one. I am going to delete this doodle because we did not, break above, 376. Here, this Fibonacci extension there did seem to be acting as resistance. We did break lower, but I do think that maybe this could be finding some support along this uptrend that, we have faded below, but maybe, let's see, if we get down to around 250, maybe that would be an intriguing level. So I'm just going to add an alert at, let's see, not 269 because I think that's getting, a little too aggressive, but maybe 250. And so I'll just add that alert. I'll save that. And so we now have, this alert here to be keeping in mind. But personally, I don't really like the options data on Hycroft. So I don't think that it's necessarily a good one to be trading. Also very retail heavy and a lot of interest from like the AMC crowd, which I think could be kind of, a bad thing because then it becomes, very hard to sell, to take profits. And so I haven't been in Hycroft for a while, but yeah, maybe around 250, seeing some fake out breaks, maybe below this, trend line. But yeah, really just looking at this, we do see, this is actually pretty interesting. We do see, this big surge in volume, but, it's not really a widespread candle like we saw over here, but that didn't have much volume behind it. But then on Monday the 19th, we did see an even wider spread candle, but not much volume behind it. So there's some divergence there suggesting that a bottom could be in with it, and it is bouncing about 4% in the pre-market. So I guess will be interesting to see how it holds up relative to this trend line, which goes back to the lows from November 2023, as well as, let's see, looks like the low of March 1st, so not February of 2024. But we did, see a lot of breaks below that, so maybe that's not so significant. But that smaller volume on that wider spread candle, that does suggest there's some divergence there. You would expect to see more volume on a move like that. And so that really just kind of indicates that this is not really supported by the sellers. And so we see this fade lower and, really not that much volume, buyers stepping in at the end, it looks like. So yeah, very interesting chart there. But yeah, I think that at this point, in my view, too risky, but maybe if it comes down to 250, that might be of interest. And then so the next one I believe on the list is going to be QS. This is QuantumScape. We did see a rejection from this gap that has since been filled. That gap was at 483. We hit a high of 485 and then quickly got rejected, which I believe was following earnings, which looks like earnings was on, or maybe earnings is coming up. I'm not really sure. Maybe I want to pull that up in the information over here. So let's see just the max pain for QS. And then we can see, so insider sold. I believe they did have earnings a few days ago. So the data over here is not necessarily correct. But yeah, kind of a big sell-off here yesterday, having a negative 16% move to the downside, but then filling that gap there. And so, I am really just looking for with this that we have been holding, we have been maintaining higher lows. We can see a low over here was 340. Then the low over here was 360. We did put in a higher low here, which we then broke. That low was at 375. Then this low at 377. And so really I've got my eye on 380. I think I've got an ad for one more share at 380. But yeah, I mean, I think that this could be an overreaction. I'm not really sure, but it could also just be, continuation of fade. And this does just spend some more time consolidating. So good to be patient with that. But yeah, we did see, a big green candle, great green volume behind this green candle. And then we saw increase volume with this sell-off here, and that is a wider spread candle, so it's not really looking too good. I don't think it's necessarily found a bottom yet, but will be an interesting one to keep an eye on. This is one that I do hold, but I kind of, in all honesty, wish I didn't. My average, I wasn't averaging down when it was over here. My average is 5 something. So yeah, I wasn't able to get out at break even here. But I wish I would have been more aggressive getting my average down, and then I would have probably exited. Just a little speculative, as all stocks are. But then I also wanted to talk about Bull. This is ticker symbol Bull or Webull. The platform that I am using to go over these charts is Webull. And so, makes sense to be trading it, why not? But then also, I did want to point out, I did lay out this thesis where I had a stop loss here at, let's see, we can see it there at 1198. So that was hit, that was filled yesterday at 1195. But then following the bounce from 1161 being the low yesterday, I was kind of intrigued because while we did see this gap down, didn't see a widespread candle, and the volume behind the trading yesterday was in concert with that. There was no divergence. A smaller spread candle, smaller volume. While I guess it would have been nice that if there was a larger volume and we didn't see a widespread in the candle, that would suggest that buyers are stepping in, holding that up, and then this could start to move. But yeah, I mean, I just thought that this was interesting, and since it did look like it was respecting those lows, 1161, I looked at this on the 10-minute time frame to evaluate, did I want to buy those shares back? And so what I saw was that we were putting in higher lows. As we can see here, that low of 1161 was put in at the beginning of the day, and with that we did see a decrease in volume, and then as price started to go up, we also saw a decrease in volume. So I was, a little bit on the fence, but then I saw these higher lows be put in. So this low, I guess over here initially was at 1189, but then we broke that, hitting a low of 1185. Then over here, 1188. And so I had an alert placed at 1187. And I'm actually going to delete that now. But the reason why I had that was because I wanted to see if it was going to break below this higher low. And we, in fact, did get that, as you can see here, hitting a low of 1186. And then towards the end of the day, we did hit 1173. But still, that is a higher low than what we put in earlier in the day. And so I re-entered, I bought back the shares. I had sold half of my position at 1195. I bought back at 1195. I could have, bought back at 1190 or, 1180. Oh, well, not a big deal. But I mean, I just felt like this was, me getting swept with that stop loss, which always tends to happen with stop losses, and really just feeling like, I think that this is probably going to be going higher. And so thus far, we have seen that in the after hours, in the overnight, and into the pre-market, having hit a high of 13.99 after closing yesterday at 11.91. 13.19, if I said 99, I meant 13.19, having closed yesterday at 11.91. But being down 4%, it's now up over 8.5% in the pre-market. And so stepping back, I'm pretty excited about this. I do still have a buy order placed at 11.10. I hope that doesn't get filled at this point, because that was kind of to manage risk and balance my position. But I think that we could be seeing, the upside potential getting up to fill this gap here at 1641. I do have an alert here at 16. But before we get to that level, I do believe I plan to sell 20 of my shares, which is half of my 40 share position here at, I believe, 15 74, I'm not exactly sure, but just to let you guys know about that. And then also, I know I'm going over past the hour, but I did want to go over Moderna, which is over here. I don't really have much on the chart. I did have this downtrending channel that we have broken above, but then this red line here at 45, that would be like a take profit level. But then I noticed I had this alert here that was below 32 and below 30. But as you can see, we are trading below $30. We closed yesterday at 26.39, up 6%, and then up about 2% more right around 27 in the pre-market. But yeah, I mean, why did I start looking at this? Why did this get placed back on my radar? And so that's actually because Mr. Chart Norris posted this yesterday, which I liked. And so he said the monthly candle chart, I'll leave it here before I go. And so he just has this really nice chart. You actually can't see it, but if I do remove myself for a second, you can see that he does have volume decreasing here as price does look like it's potentially starting to form a bottom there, corresponding with the lows over here, the bottom being here before this nice move up. And then potentially we're starting to see that bottom happening again. But again, this is on the monthly time frame. Lower volume, diminished volume, could be seeing a breakout from this falling wedge that has been formed on the monthly time frame. And then we do have this kind of range here. So what he's suggesting, I believe, is a bounce to test the bottom side of that level. And so we can look at that over in my chart just to kind of do a little bit of a comparison with what he has up there. So I'm just going to switch over to the monthly. And so we can see that, let's see, getting this kind of lined up, that we do have, this red line, we're below that. We do have consolidation highs over here. Again, this is on the monthly. I'm actually going to delete that red line because maybe that corresponds with what he's talking about. So that's like the pivot low from over here. So if I do, switching back to the corrective, that would be like over here, I believe. Yes, so with this pattern here, very nice. So yeah, what I should do is draw a horizontal line from that low. And so that would be maybe like a caution level to consider taking profits. And the reason why that would be a caution level, or maybe I should do it orange, because maybe we have some retest of the consolidation lows here where we have 3 months overlapping with those levels. And so that would be red. So we got both of those levels locked into place. That would be at a price of around $62 to $76. And let's see, he did have this level going back to the highs over here. So yeah, actually, maybe I want to adjust that to correspond with the consolidation highs over here. And so let's see, I'm just going to do it. Just want it to snap to that closing price there, which was $74.10 for the month of July of 2020. So I'm going to lock that into place. And so we can see those consolidation highs that were resistance. They were support over here. So maybe we could be retesting that. But then thinking about levels to the downside. So he does have, basically the lows over here. That's kind of what I was thinking about with this. But before even, really thinking about that, I wanted to draw a level going from like the consolidation highs over here. So basically the close from the month of April 2019. I'm going to lock that into place, and that level was at, let's see, the close was 2603. We're right around there. So that is getting into kind of like the caution, maybe wanting to add to that position. But I do think that there is some downside risk that really just with like the close over here kind of originating with it, that goes down to around 1527. The closing price there, let's see, was 1527. Lock that into place. That would be a green line, but maybe we do pull back all the way down to here. So that's maybe some further risk that is down to 1310. And so just kind of continuing like the color scheme, I'll make that one. Actually, I'll make that purple because it's not a gap. Because it was filled if there was a gap there. Yep. So this is on the monthly time frame. I don't really think that this downtrend is really that useful. But yeah, we do have kind of this gradient of levels, and we have kind of been testing them. We do see, as Mr. Chart Norris was pointing out, decreasing volume as this is consolidating. And we do have this dragonfly doji here, a hammer candle here, but this month is not over yet. So very interesting there. So yeah, I mean, this could be one to, pick up a $26 share maybe. And then if this does dip lower, maybe to accumulate on those lows, because where it's currently at, even just to getting up to that orange level, so that's being a little bit more conservative than Mr. Chart Norris, that represents an over 100% move to the upside. So I think that actually looks pretty nice. I don't have a position in it, but I might put a note in my notepad to maybe place a limit buy for just one share, just to have some fun at 26 if we do get a retest of it. But if that also doesn't happen, that's no big deal. And also to note, this is on the month time frame, so it would take a while for it to be playing out. But yeah, I mean, let's see over here. On the kind of shorter time frame, we do have, maybe some consolidation lows here. So maybe looking good there. That will be around 24. So yeah, in the range from 26 to 24 could be some really nice opportunities there. But yeah, I'm just going to open up the chat real quick. I know I rambled on for a little while. Hey, Ricardo, what's up? I saw that your message was retracted. So sorry if you weren't able to post it there, or if you had to get running. Sound, yes, Hydro Hustler, I hope you're still with me, but I will definitely go over that real quick. And so this effectively did pull back to the level that I was talking about, 1025. So we hit a low yesterday at SoundHound of, let's see, $10.20. We can see that highlighted over here. So that was a pierce of that purple line. You can see marked there at 1025. And we actually closed above it. So I think that's looking really good. I also have this 618 here at 1022, which we also pierced that level. And that corresponds to, let's see, this Fibonacci retracement here. And from that, I basically did this Fibonacci extension coming down to around 1025. I could lower that to 1020. And from that, that will be suggesting an upside move to around 1414. We also have a gap fill here at 1525. And if we're to go past that, which I feel like, really just like what we saw with, let's see, QuantumScape, filled that gap, but then got rejected right away. So I think that's kind of, a word of caution around the gap up here. If SoundHound gets to 14, maybe we don't even fill the gap. Maybe it's just a tease. But if we do fill the gap at 1525, there could be a lot of resistance there. And also, I believe I've talked about this being potentially, an inverse head and shoulders pattern. It's kind of an ugly one. But if we do take a measurement from there, that will be suggesting price going to around $14. And so that measurement is based on the top of the head. In this case, it's inverted. So that's the bottom here to the neckline. And then you take that distance measured here by, this little box. And that would be suggesting price goes to around $14. Confluence of levels there. So that makes sense. 14 and 14 just below the gap fill. So I think that looks really nice. And if you're wondering where that 1025 comes from, that was the pivot high hit on March 14th of 2024, 1025. You can see it right there. And that, as far as I view it, corresponds with this cup and handle that was formed, got a massive move to the upside following that, did pull back, break below, but then put in kind of this inverted head and shoulders, this inverse head and shoulders pattern, and then are now pulling back to retest that neckline that is also the brim of that cup and handle. So I feel like it's a pretty significant level, 1025. I personally just have one share, so nothing too crazy. I did take some profits up here on, I think, a few shares or something like that. Again, nothing too crazy. This is just kind of a side play for me. But yeah, I do have a stop loss at 10. If we do break below this, I would exit. I believe my average for my one share is 978. So I just trim before it goes negative, and then I'd kind of reevaluate. But yeah, if this does break below 10, I do get stopped out. Would I be continuing to look at the chart? Yeah, because we do have this uptrend here that could be acting as support. And something that always tends to happen with charts, you have a level that's clear as day to me. 1025 is significant. We did hold it. We are currently respecting it. But if we do break lower, I do get stopped out at 10. Where would I want to re-enter? We have this uptrend that's just, let's see, not locked into place. It's kind of a doodle, very casual level. I think I was looking for, consolidation or a confluence of levels over here. But if we do pull down to around 959, that would be, corresponding with right around here. 960, maybe 969, I would look to re-enter and to kind of evaluate that. But then looking at this, thinking about the volume, trying to get it better at analyzing that, we do see, let's see, an increase in volume over here with a wider spread candle here. So that would have made me think that this is a wider spread in the volume, that is supported. But then the following day, we saw an increase in volume, massively widespread candle, and then starting to see a pullback in the volume. Although with that pullback in volume, we did see a much less of a spread in the candle there in the trading. So that does make me think that there is confluence. There's no divergence between the volume here and here. But then the following day, we saw an increase in volume relative to the open and close. We saw a smaller candle. So there's some divergence there. We did see a massive increase here, but not much change in the spread there from open to close. Although there was a gap up, there was a big wick up. So that made me think that sellers were stepping in or stepping out, and that we might be seeing a pullback. And so that is, I feel like a good analysis from like a Wyckoff standpoint, which I'm really just trying to learn. I'm reading the book on it now. And so we have seen this pullback, but to a technical level. And so on that pullback, what do I see? We do see a wider spread candle here with lower volume. So that does not line up. That does not make sense. There's some divergence there. And so with that, we saw an inside bar here, open higher here, but then closing lower. Not much volume there. And then we see a wider spread candle following a gap down, but higher volume. And so what does that mean? Let's see that there's higher volume, wider spread candle. So there's no divergence there. That is supported, but it's not like a super, widespread candle. And we do have, this technical level here, the 618. If we do, though, break below the 618, I had kind of mentioned based on this trend line that, let's say, 1060, 1070, that would be around where I might be looking to re-enter. But if I do add the 786 to this Fibonacci retracement, we can see another level that might stand out. And so that is going to be 955. So really from like the 950 to 970 region, I would think that there's probably going to be a lot of support there, and that could be a really nice dip buying opportunity before this goes higher. So yeah, for me, I'm still just waiting for the stop loss to be filled. If the stop loss is not filled, I'm just going to chill with the one share and I'll ride it higher. And that could be bringing me to $14. That'd be great. Maybe I'd take profit there, or maybe I'd wait just for fun for 15. Or, maybe I'd have a stop loss at 13. So I could, take some profits higher than the high over here if I do see a pullback. But then leave it on the table for the opportunity to get that gap fill at 15.25. But I do think that could be some resistance, so do keep that in mind. But yeah, just about 11 minutes before the market opens, so I'm going to close down the stream. It started a little bit rocky, but I'm feeling really excited about this. These charts look good, and hopefully my breakdown of them was helpful for you. But as always, those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more analysis like this. Thanks a lot for watching. Have a great day trading, a great Tuesday, and I'll see you in the next one. Take care, you guys.